Good afternoon, everyone. Happy Friday. This is Jared with Self Liquid. So I've got the SPX pulled up here, closed just shy of 0.25% up on the day. But if you've been kind of following along the last couple days, I've been talking about this inverse head and shoulders that looks like, probably most, technical analysts at least have seen that. And right now, just sort of like a pilot, you have to kind of follow your indicators, and this type of a signal to me is bullish. So going into next week, I did take two positions that I put on at the end of the day, one in Coca-Cola and the other one in Google. So if we jump over to Google, the reason I did this with Google is basically just similar to the S&P. I'm looking for basically a return to the mean here, so a move back to the 34 exponential moving average. And I'm looking at this squeeze here on the daily chart, and you can see momentum has been shifting upwards. And going into Monday, or really just this upcoming week, what I would like to see is Google move up into this moving average and maybe test this first level here, the 382, which also aligns with the swing from low to high to low, and that's that's sort of what I'm looking at here with Google. So I sold a spread at the money. I believe I did 10 wide. So I'm bullish on Google at the moment. I wouldn't say overly long term. I'm really just looking for a quick move up early next week. And since I sold a spread, if this thing does kind of chop around, it's not going to kill me. And if we look at just kind of smaller time frames here, 39-minute and 78-minute squeeze look like they're both getting ready to fire long. Now, obviously with the weekend coming up, you can kind of say that those time frames are somewhat irrelevant now because all the time over the weekend will pass. But anyway, this is sort of what I'm looking at here in Google. Now, if we jump over to Coke, this one is sort of a counter trend play, and I'm doing this really just because I think this thing is really overextended to the upside here, and would be looking for just a move back down to basically the top here, so around 48.62, which basically would kind of come into play with the top band here. So this is a 34 exponential moving average, and this would be 2 standard deviations. And anytime you go above that, you're getting extended. And if you look at this thing just kind of historically, so we'll go back, and this is from a weekly time frame, you can see that anytime it got up in that area, let me just kind of highlight that here. So you can see there, touched it there, came through here. Let's even go back further and see, maybe as far as I can go. Yeah, but anyway, you can tell that it's respected that really pretty well. So anytime it's gotten to the top of this was a good opportunity to sell options, like sell calls or buy puts, and sort of the same on the inverse. So anytime we came down to the bottom of the band here, that provided a good opportunity to buy calls, buy a vertical spread, or sell put credit spreads. So anyway, on Coke, I did something I don't typically do, which is buy options just outright. I think more times than not, it's a pretty good way to just quickly lose money if you don't know what you're doing. But the IV on these options are pretty low at the moment, and so I bought puts, I think 28 days out. So I bought one strike in the money, so they're the 50.5 or 50.5 puts that expire in 28 days. So really what I'd be looking from here, so let's run from the low here to the high. So really, I mean, if this thing got going, and I'm not necessarily expecting this thing just to eat it necessarily, but I could see something where it tests this 1272, so the 50.56, before making a move down. Obviously, what I would be, best case scenario is that it gaps down on Monday, or starts moving lower on Monday. And anyway, so that's sort of what I'm looking at in Coke. This isn't really necessarily a signal-based trade. This is one really just looking at this thing from a weekly and daily perspective. In my opinion, it's definitely extended, and just based on what this has done in the past, anytime you touch or kind of test these zones, you typically see a pullback. So that's what I'll be looking at in coke. And really, let's just kind of take a look at the futures market really quick. So if we look at oil, this is one that really just has been hammered for the last month or so, and has finally seen a bounce. If you've been following along with me for a while, this is sort of the level I was looking for, so around 55. And this is not necessarily something I want to get long here. I just think that after such a massive move down, you are going to get somewhat of a bounce here. But let's take a look at so the whole market really got banged up there after a while, and you can see that the transportation index looks very much like the S&P does. So if you don't ever follow this, this is a composite of the transportation index, and this is sort of used as a leading indicator if the market's about to sell off. So you can tell this looks very similar to sort of a lot of patterns out there right now. A lot of the banks look like this: Visa, MasterCard, Wells Fargo. I was looking at setting up a trade in Wells Fargo long as well, just basically because you have this inverse head and shoulders pattern setting up here, and this is a bullish pattern. So what you would expect, if this plays out the way it should, is you'd get a break of that neckline there, and typically the move is going to be the same length as the left shoulder. So this would take us to right around in this area here, around 11,200. Now this is in the transportation index. Now let me look at Wells Fargo. So not quite as clean as that, but you can see that there was a few crazy wicks there. I don't just love banks necessarily here, but it does look like we're about to see sort of a bounce, after a pretty nasty move lower. So overall, I'm not, bullish banks long term. I believe I talked about this before with Goldman Sachs, how from a weekly and monthly time frame, you have, big squeezes that have fired short, and I don't really, expect that to slow down. Now, if we take a look just from a monthly perspective, you can see same thing. So Goldman could probably go to 191 and just be getting started. So it's it's really tough to say, because if you look at this, we're talking about inverse head and shoulders, where let's just clear up all these kind of resistance levels real quick. Actually, let's just get rid of all that. Okay, so a lot easier to see here. So you had the head and shoulders, and I'm still kicking myself. I just didn't get in on this thing. I've been watching it for a few weeks. But anyway, so you can see the pretty clean, shoulder here on the left side, and you've got the head here, and then your weak right shoulder, and that was the neckline, and we got our break. And so this was, so this is a monthly chart, but as you can see right now, we're below the 34 exponential moving average. And so to me, the way I look at this is anything with a close below, from a monthly perspective, obviously in this case, is bearish. Anything close above is bullish. And right now, we're below that. Now, if we look at the weekly, I think we're probably pretty close, to the bottom here. So, you can say right now on Goldman, it is a little extended to the downside. Now, from a monthly perspective, if this, squeeze really gets going, and the way you look at standard deviation is that basically there's a 5% chance that you're going to breach that level here, and I believe it's a 67%. So the odds of it going outside of this purple band is 67%, and the odds of it going outside the yellow is 5%. So really, from a probability kind of standpoint, it's very unlikely that we don't get a bit of a bounce here. Now, we've seen some sort of out of the ordinary type moves lately. And like I said, if I don't really like banks as a whole right now. There's just a lot of things right now in the environment that really aren't conducive to them making money. One being the interest rate hikes, and with everything tightening, it's not going to be good on the financial sector. So anyway, if I'm trying to think if there's anything else, the FANG stocks, other than like I said, the fact that I'm long Google, it's something where most of these patterns now, Facebook and Netflix are two, especially within FANG, that I don't really want to do anything long here. I think both of them really have looked pretty ugly for a while. Facebook specifically, I mean, this one has been plagued by bad news and a lot of new competition, and I just feel like Facebook is really going to have to kind of innovate to start bringing in new revenue streams. I did see that they released something called like a portal. It's basically just like FaceTime or some sort of video chat, very similar to, I believe, devices that Amazon already has on the market. So it's just nothing. I mean, unless I haven't really dove into the product, so there may be something unique about it. But in my opinion, I mean, it's just nothing that doesn't exist already that other people have sort of established. Like I said, like Amazon or Google or Apple or anyone that has these kind of physical devices already, where Facebook has a huge platform and they have tons of users. So I don't know, maybe it is a good thing. I mean, maybe if they do get into tech, or at least physical tech, that can help. But let's just kind of dive through these last few really quick, and then I'll wrap this up. So Apple, you can see Apple has found support here, and today closed above this level, so that's definitely a good thing. So really, I mean, going into next week, I really think we are going to finally see a pretty big bounce. And, the surprise move obviously would be it continues to sell. But, a lot of people are kind of expecting the Santa Claus rally. The economy's good. But overall, I just think that, I don't know, it's not something I'm long-term bullish here. I'm definitely thinking we're going to see a move back to the mean. But from there, that's where I think it gets hairy again. I mean, I could see something like this in Apple where we retest, currently around 213, probably 215-ish. And then that would lead to, a bigger move down. Now, depending on how long this all takes, this could, lead into the next Fed meeting, which I think will be in January, and I believe that's where they're expecting the discussion of hikes, or maybe it's actually in December. I'll have to double check on that. But anyway, that's sort of what I'm looking at now. Is I think we're sort of oversold at this point. So I would expect at least some of these stocks that really got hammered to see a bit of a bounce going into next week. And but long term, I'm still not really bullish on some of these bigger names like Apple, Facebook, Netflix, or really even Amazon. I mean, once both of them hit $1 trillion, I just think it was time to kind of unload, take profits, and let these things kind of come back down to earth. And with Amazon announcing their 2 new headquarters, so they decided to split them, I saw. So there's going to be one in Virginia, and I want to say the other one is in DC. I don't really remember, but anyway. So that's all I've got for today, guys. I am going to be recording a beginner's options class that I'm going to release for free. It'll probably be roughly an hour long, maybe an hour and 15 minutes. So if you want to check that out, I will be posting that soon. So y'all have a good weekend, and thanks for watching. And if you're enjoying this, please subscribe to the channel. Take care.